and welcome to TaxVibe, a podcast by the Tax Institute. I'm Robyn Jacobson, the Senior Advocate at the Tax Institute and your host of today's podcast. On the show, I chat with some of the tax profession's brightest minds, drawing on each guest's unique perspective to give you valuable and practical insights you may not hear every day. We hope you enjoy this episode of TaxVibe, recorded live at the Tax Summit at the ICC in Sydney. Today I'm joined by Andy Milidoni, CTA, partner at Jacobson, Winter Slattery. Andy specialises in all aspects of taxation, revenue law and trust law, and some aspects of superannuation law. He advises both public and private corporate groups, SMEs, high wealth individuals across industry sectors. And he also works closely with a range of intermediaries, such as accountants, business and corporate advisors, liquidators, financial planners, and court-appointed trustees and guardians. Thank you for joining us at Tax Summit, Andy.
Thanks, Robyn. Thanks for having me.
And your session was talking about the changed position, the firmer action that the ATO is taking in relation to tax debts and what sort of support practitioners can provide their clients. So I wanted to unpack that a bit more with you.
Yeah.
It is a changed environment, and when we look at historically, the ATOs, of course, had very wide-ranging powers and firmer actions they can take when it comes to debt. But we know during the pandemic, there was a directive to say, take it easy. We don't want businesses going under. We want to keep them afloat. So we did see very generous remissions of penalties, general interest charge, shortfall interest charge, generous payment arrangements, and the firmer action of things like direct penalty notices. And we'll talk about all the different types of things they can do. Also, the foot came off the accelerator.
No.
Now, whether that went too far, people can talk about that and make their own surmises as to whether that was appropriate or not. But it does seem that some businesses have perhaps taken that and expected that's a new normal, which it's not.
No.
And I want to talk through with you the levels of tax debt that we're now seeing.
Yeah.
We are hearing anecdotally through our membership that the ATO is taking stronger action. And they've effectively said this themselves in their public statements. So can you talk us through what does the current landscape look like? What is the amount of debt that is now owing? Who owes it? And is this ATO action appropriate?
Well, I think that's right. I think since COVID and probably since early 2022, we've seen enormous increases in ATO collection activity. I think just recently, in a speech made by various ATO officials, I think the approach of the ATO moving forward from this point on is to go back to being an old school tax collector. The point I think to make here is that, uncollectible debt stands at 50 bill. And the ATO's taken the view of, well, there's a risk management aspect here in that there's historical debt, which is very high and in fact, I think doubled since before COVID. And there'll be more debt to collect. So they're biting the bullet and they're putting their foot down on collection. And we've seen that through the legal recovery actions. We've seen so many thousands of DPNs being issued, garnishee orders, a lot more engagement or at least enforcement, but ATO officers chasing debts, chasing lodgements is a big thing as well. A lot of what I'm sort of seeing is there's a bit of an attitude, which I know that accountants and other advisors are trying to get on top of, and that is some taxpayers are saying, look, I won't lodge because that means I won't have the debt.
Yes.
But that's only really compounding their own personal circumstances when it comes to debt. But the reality is that the ATO are being told to collect the debt, and that I think the sort of the generous approach is, I think, well and truly over.
Well, they couldn't keep handing out money forever. So the role of handing out all that support, which, again, people had their own views as to whether that was or wasn't appropriate, but it did its job. They're now at a point where they've got to go back to being a revenue collector. And the figures are quite astounding. If you look at the representation by the SME sector in that collectible debt, it's about 2/3 of it. It's disproportionate.
Yes, it is a lot. Yeah.
So why is that? Because there's always this focus on big end of town and whether they're doing the right thing. But in fact, the problem seems to be more at the SME end.
I think that's right. And a lot of that debt is carried over from the pandemic. I think we're in pretty tough economic climate at the moment as well. And in some sectors of the economy, there's a sort of the double whammy of costs going up and revenues dropping, and they're being squeezed, and that's hitting cash flow.
Yes.
And unfortunately, sometimes the first things that aren't being paid are the tax collections. And where it's PAYG withholding, for example, it's opening up directors to personal liability through the issue of DPNs. So unfortunately, it's mainly in the SME sector, private groups. And they're saying most of that debt is as a result of the non-payment of activity statements, which broken down is PAYG withholding and GST liabilities.
Yes, both of which are now part of the DPN regime. So historically, of course, it was just withholding, and then SGC came into it, and then we added more recently GST, and perhaps less of an issue, but luxury car tax and one equalisation.
The other indirect taxes.
So could you explain this 3 months rule that exists? Because people are often a bit confused about the thing to do with the reporting and the non-payment and when director penalty notices can actually kick in.
Yes. The important thing about responding to a DPN is that what you should be doing even before a DPN is issued is getting your lodgements in. So in relation to PAYG withholding and GST and the others, except for superannuation guarantee, you must lodge within 3 months of the due date of the lodgement. If you don't do that, then any DPN that you get is what we refer to as a lockdown. And what that means is that in the event you haven't paid, you haven't lodged within the 3 month period, when you get your DPN, the only options you have are to pay it. Because an option under a DPN includes putting the company into some form of external administration, and you don't get that option if you haven't lodged within the 3 month period. Okay. So that's what the 3 month means. And unfortunately, a lot of people, I think, when things are going southwards, they sort of going back to what I'd said earlier. We won't lodge because the debt's not there, and we'll deal with that later. But the take-home message here is that even if you don't have the funds to make the payment, make sure that your lodgements are up to date. So if things don't turn around in a reasonable period of time and you can address the debt through payment arrangements and other engagements with the ATO, if it gets to the point that the ATO issue you the DPN, you have the option of putting the company into liquidation and removing the personal liability. DPNs are used as sort of the first step towards, if it gets to it, putting the company into liquidation. It's one of the first steps that the ATO takes in the journey towards putting the company into liquidation. So,
leaving aside for a moment the 3 months rule and director penalty notices, is it an unrealistic and perhaps foolish move to think the ATO is not going to find you or not going to be interested, that if I don't lodge and don't pay, they'll somehow forget about me?
I think it's, look, in some cases, you may be able to fly under the radar, but only for a period of time. It really all comes to a head. And what we've found, we've had experiences where there's sometimes, look, the ATO systems are so much more sophisticated. There's a lot more talking between systems, etc. But what we've found is that taxpayers might be on the tax office's radar for something else, and then they pull a thread, and then they see what else is going on in terms of non-lodgements, debt that's piling up. And as I said, oftentimes it might be something else that they're looking at, and then it opens up to everything else. And then that's where I think taxpayers really are in a world of pain.
Andy, can you run us through the powers the Commissioner has to collect debt? What is this firmer action that we're referring to?
Yeah. Look, powers include issuing garnishee notices, issuing DPNs, freezing orders. There's the offsetting, obviously, which is where a credit's owed in relation to one part of a lodgement, but is then withheld where there's another debt. There's the general insolvency regime and bankruptcy regime that's available to the Commissioner, and the starting point there would be the issue of statutory demands and other things. So they're all the more formal legal recovery actions that the Commissioner can take. Now, whether he takes those or not is really as a result of everything else failing.
Yes.
And we've seen examples where, and it's not with everyone, but there are examples where you've got the taxpayer that literally puts their head in the sand and pretends that this is not happening, and they let a year go by, another year, the notices are coming in, all the other
and they won't engage with advisors.
Just won't engage, because I think there's it's like a slippery slope. There's sort of so far to falling off the edge of a cliff. There's obviously other things going on with the business and maybe in the personal life. It is a world of pain. But people get to the point where they put their heads in the sand, they don't want to deal with it, and then you see the much more formal recovery action. We had a client that got to the point of a statutory demand. It wasn't a huge amount of money. A lot of other things were going on. There were other debts within the group, but they let it get that far down where they actually could have paid it, but they had their head so far in the sand that they just were not getting on top of these things. They actually end up paying the statutory demand, because that was the first point before the ATO was going to apply for a winding up order. So we're very much in these formal legal recovery powers really come about where the ATO has really at the end of their tether as well.
Yes.
And oftentimes they'll resort to those powers, sure, for outstanding debt, but they see other risks.
Would you also throw a departure prohibition order into this bundle?
Oh, if there's a risk of the taxpayer leaving the country. So there's the DPOs. So yes, certainly.
Yes.
And so that those all make up legal recovery actions that the ATO can take.
Is it fair to say that when a matter hits your desk, it's already escalated to a pretty serious point? In other words, you're the lawyer, not the accountant. And are there ways or approaches that accounting practitioners can take to try and deal with these well before everything elevates or escalates to such a point that they've got to bring the lawyers in to fix everything?
Yeah.
Because I would have thought the cases you see are going to be the much more heightened ones.
Yeah, and that's right, Robyn. As a tax lawyer, we get involved towards the very end when all the alarms are going off and the red flags are being shown. Look, I have enormous respect for the accounting profession. They do wonderful work. They're the trusted advisors to their clients and taxpayers. I work a lot with accountants, and I see the very good work that they do. I think the good practices I'm seeing with accountants is that they encourage their clients to keep lodgements up to date, even despite this idea of we won't lodge because the debt won't be there. No, lodge, because they understand that it gives options when it comes to DPNs.
Yeah.
Close liaison with the tax office and negotiating payment plans as soon as possible, but also keeping in touch with the tax office when circumstances change. So there's an ongoing liaison with the tax office. And I think, look, we all have our sort of views about tax office behaviour, but overall I think if you continue that engagement, keep them informed, then I think together the debts can be managed. Now, if it gets to the point that the company is looking at going to some form of external administration, that might be the case. But by keeping the tax office informed and keeping that engagement going, I think steers the tax office away from a lot of the more formal legal recovery actions. So take, for example, garnishee notices. We often are called because a client might have received a garnishee notice, always in the most unexpected circumstances. It creates a lot of turmoil.
And when they can least afford it.
So one minute they think there's money in the account, next minute it's not there.
Yes.
And that's an example where I see that often happens where there's been very minimal engagement, or if there hasn't been compliance, or there hasn't been follow-up. So I think the take-home message is keep your lodgements all up to date, talk to the tax office, have the accountants are talking to their clients, the clients are open with the accountants, really trying to keep engagement to the highest possible level as possible. And also, where money does become available, make payments, encourage additional payments under a payment plan, or to chip away at the debt to demonstrate to the ATO that there is a history in relation to that particular debt, that there is payments being made. I think with a debt collector, whether it be the ATO or someone else, if they see that there is a willingness to get on top of the debt and to make payments, it's really not in their interest to push the more formal buttons because that costs money as well.
Of course it does.
It costs money and time. But the opposite is no engagement, gone AWOL, head in the sand.
They don't like it when you go silent.
You're pushing the collector to start pushing other buttons to get the reaction. So, yeah, I think that the short of it is liaison and engagement.
An anecdote I heard many years ago. Remember the program Wheel of Fortune?
Oh, yeah.
Now, apparently there was a taxpayer who owed some money. I don't know how much. And obviously the ATO had been trying for some period of time to try and collect this debt. And I think it used to be on at 4:30 in the afternoon or something. And this particular ATO officer was home that day, this is well before COVID, and was watching the show when this taxpayer appeared on the show.
Yeah.
And he immediately rang the station's producers and said, I want to issue a garnishee notice for that fellow who's on your show because he owes us some money.
Yeah.
And the station said, don't you know that we pre-record these?
Oh, it was already gone. The money's out the door. So good for the taxpayer, I guess.
To garnish
for the ATO.
Yeah, very funny.
Yeah.
So what are you seeing and hearing out there? With the escalated action, do you see that the ATO is cooperating? Because we are hearing increased feedback, and I don't know whether anything has changed as such at the ATO's end about payment arrangements not being quite as forthcoming as they might have been. Now, we do know that there's firmer action than back in COVID days, but is it getting more difficult to get a payment arrangement?
I'll say it is. I think there's a number of, if you've got a taxpayer that's just fallen on some hard times, has a very good compliance history, my experience is that you could get a payment arrangement between 6 and 12 months without too much fanfare and without too much grief. I think where there's sort of the repetitive, the taxpayer that's gone through the ups and downs over the last few years, has put a few payment arrangements in. There's been a few, some non-compliance around that, but eventually got through it. It is for those taxpayers, it has become much harder. Anything beyond 12 months is much more difficult, more information, more submissions, more trying to demonstrate that the taxpayer can go to third parties to get funds before the ATO will entertain much longer arrangements. I've seen some taxpayers having to give security over the debt. It is certainly much tougher. What I'm hearing from accountants is that it certainly is much harder to negotiate, and the ATO are taking a little bit more of a tougher position on how generous payment arrangements will be.
What advice have you got for practitioners, particularly the accounting practitioners who might be perhaps a little closer to the coalface than you are in terms of the direct dealing with the client and that tax debt?
Look, I think the advice is sometimes it's the difference between is the business going to survive or if it's not. If there's a genuine belief that, look, a longer arrangement is needed and that's going to help the business, because really the difference is we either step on the business and have the ATO sort of take more formal action and it basically is wound up, or trying to put forward a pathway where the business can survive but the ATO can get their money back, perhaps in a much longer time frame. I think for accountants, I think they know a lot of those issues, but to work on pathways with the tax office, but also with the clients to demonstrate that it is worth entering into that longer payment arrangement, that everyone's risks are being sorted, in that the ATO obviously want to collect the debt, but they want to be able to see that the money is going to be forthcoming. So I think we just need to get a little bit more creative in the way we approach payment plans, with being able to juggle a number of these things. So I think the advice is to probably provide more comprehensive submissions, actually demonstrate to the ATO that there is that pathway, that there is some unusual circumstances affecting the business that can be traded through, and to really go in and advocate for the taxpayer, but also to understand the ATO's position as well.
It is such a tough question to ask, though. You've got a business owner. They might have set up the business 40 years ago, 5 years ago, whatever. Their heart, their soul has gone into this. to confront the idea that they may need to shut down the business, give up the business, that it's not been financially, economically successful. It's not just about the financial aspect. There's all that pride and all that sentiment caught up in it, and trying to get the client to acknowledge that and face it and deal with it. Very difficult.
It is. And there's, huge financial and personal investment.
Yeah.
The other thing that we find, Robyn, is sometimes you've got, it's a great business, and then what happens is an audit comes along, and they go back 5 years, and it's not because there's been some sort of deliberate attempt to avoid the payment of tax or the assessment of liabilities or whatever, but something's gone wrong. They've gone back, and now they're confronted with the payment of back taxes.
Yes.
So you're in a tough economic environment. Looking forward, you're barely paying your meeting your liabilities, and then you have this audit, and then you've got taxes going back 4 years with interest and penalty. That can be quite a shock, and having to negotiate payment plans around that historical debt can be very challenging. And this is where I think, I'd like to think the ATO would step up and recognise that here's a situation where no one sort of saw this liability, or maybe, they maybe should have sort of seen it, but for whatever reasons, and I've seen it in some circumstances where it was just very unfortunate that the businesses got themselves into that position, and here comes an audit. And you'd like to think that in that scenario, there would be more understanding in the negotiating of those payment plans, because not only do you have your debts moving forward and those liabilities, you also have to then find the money to try to fill those back taxes.
I've said for years that things can go undetected for a long, long time until and unless you get an audit, or there's a death, or there's a divorce.
Yeah.
And if you're unlucky, you have all three happen at the same time.
And as they say, when it rains, it pours.
Yeah, and it can unravel things that you did not expect. That, Andy, as we close off our discussion, any final tips or ideas or suggestions as to how you can help your clients navigate through this?
Look, we're in a bit of an economically volatile environment, particularly for some sectors. There's a lot of new tax law coming through. It was heard the ATO is focusing on the collection of that $50 billion of outstanding liabilities. I think a tip I would give is if a business can find the time to engage with their accountant and tax lawyer to undertake just a review. So everything's going well, maybe submit to have a review of the business, look at what the risks are from a tax perspective, try to get ahead of any particular liabilities that might be on the horizon that might not be sort of expected now. Do it in a time where there's no distress, because if changes need to be made, they should be made at a time when there's no debt on the horizon, no one's chasing anything. And if there can be some changes to put the business into a better structure or something that's more fit for purpose, I would encourage that, because there could be some really good stuff that comes out of the review, and it at least gives business owners a bit of a snapshot as to what the next 2, 3, 4 or 5 years looks like. And as much as possible, if we had the benefit of a crystal ball and we could look into that and see what's on the horizon, obviously we don't have that. But if we can just get ahead of ourselves and see what things might look like and what changes that can be made, because oftentimes when we do hit distress, there's an appetite then to, let's change this, let's change that. But oftentimes that's just too late.
Yes. So this is the equivalent really of going to your dentist for a health check, going
absolutely.
to your doctor once a year for a health check, or taking your car down to the mechanic to get it checked out.
Yeah. And we've worked with accountants to do these reviews. And oftentimes when we can sit back and go through these things, business owners, it's a very good opportunity for them to sort of do a bit of navel gazing.
Yes.
And to oftentimes the process identifies other issues that no one really expected and people are very grateful for.
Yes.
Because when we're all busy trying to sort of make money and run the business and do everything else, these things aren't on our radar, and it's a really good opportunity to do that.
Right. Andy, thank you for your insights. Thank you for your session. And there's a lot for people to think about, but I think the key message is if you've got a tax debt, engage, seek advice, talk to your accountant, talk to your lawyer, talk to the ATO.
Absolutely. And thank you, Robyn, and thank you to the Tax Institute.
You're very welcome. Thank you. Thanks for listening to this episode of TaxVibe. I've been chatting with Andy Milidoni, CTA, partner at Johnson Winter Slattery. If you enjoyed this episode, we'd love for you to subscribe, rate and review TaxVibe wherever you listen to your podcast. We welcome any suggestions and feedback. To catch all the latest from TaxVibe and the Tax Institute, join us on LinkedIn. If you're interested in being at the centre of the tax conversation, a membership with the Tax Institute could be just what you need. Stay current and connected with tangible, real-world benefits. Learn more at taxinstitute.com.au. Thanks again, and we look forward to joining you next time.